slides for some reason, but I'm assuming that we have the first slide put up for the people to see. Look, I think it's a very interesting times in there's some noise. Okay. I'm personally, I believe that we are in a extremely.
May we request everyone to go on mute? But I'll just listen to, have any additional story.
Hey guys, can you all please go on mute? Aditi, everyone, please do go on mute. And Kavita, we can only see the title slide. So I don't know if you're changing the slides.
Yes, we will change it.
So if you can go to slide 1. Yeah, next one. Thank you. Yeah, Rajesh.
Okay, sorry. I was saying that it's an interesting time for all of us in India, especially in the technology industry. It's because of the fact that most of what we are seeing, the optimism that we see in the country, and the growth that we are anticipating in the future for the overall for the country, it'll all be tech driven. So that's the that's the optimism that we all share, and the overall tech industry story has been extremely positive, as you can see. We continue to be the sort of the number one global sourcing hub, if you may, with an annual estimated run rate of over about 250 billion. Is of course estimated, given that we have probably another month and a half to go to close all these numbers. And when we look at our industry members overall, they now partner with over 90% of the Fortune 500 companies. That's a phenomenal rate at which the impact of the Indian industry and all our Nasscom members and what we do for India and for the rest of the world is phenomenal. And if you specifically for India, I think when you look at digital, it's part of everything that we do in a daily life for most people in India, and that's what has been the change from where we were, maybe a few years ago as to where we are right at this point in time. And then you can see from those numbers, we have a significant part of India's GDP overall, and almost half of what we do in services export. So, which is still a great story for us. And as even though this particular year has been a slightly muted compared to some of the previous years, I still believe that we have a very, very strong story, and our broader outlook has been extremely positive. So with that, let me turn it over to Debjani to see if there are many exciting stuff which is happening, and the impact that Nasscom has had with all our member companies and for the country. So Debjani, over to you.
Near your plans.
Hey, thanks, Rajesh. Hi, everyone. First of all, Happy New Year. Belated, since I'm seeing, or rather meeting many of you now. And I hope that the news we share with you today will make it at least a decently Happy New Year, because there were so many misgivings about the tech sector and what is going on with the tech sector. There were many
recording in progress
being written about India's tech sector. But the one thing, and I've said this again and again, the one thing that we do stand for is resilience. We stand for tremendous resilience, and whenever there is a big shift like the AI shift that's happening to us, this industry does know how to adapt. So if I look back at the last year, I think the last year was all about the global slowdown. That was the headline. That was what everyone was talking about, and the impact on the tech sector. It did have impact on the growth of tech spending. Right. Overall, the economy slowed down, yes, and it did have an impact on the overall growth that we saw. So if you look at tech spending, last year was actually higher. It was, if I'm not wrong, 3.38 or something like that, Sangeeta, trillion. Over year 2022, which was 3.15 trillion. But what went down was the growth at which tech spending, the rate at which tech spending was growing. And there was also a decline in the overall funding that was available, especially impacting the startups. That definitely saw a significant decline, right? But before I move to the next slide, and what we saw was, because the tech spending was growing slowly, we also saw significant pivot towards AI, artificial intelligence, and projects related to artificial intelligence in terms of where and how people wanted to spend the money. So we definitely saw that. So a lot of other projects were maybe getting cancelled, and companies were moving the money and resources to focus on AI projects. So those were some of the key trends at a high level that we saw play out. Next slide. So despite all the talk about how this will impact the tech sector and whether India's tech sector will be able to navigate this transformation or not, as I said, resilience is the key word, the magic word that about the one thing about the tech sector that truly stands out. And it was a growth year. Despite all the headwinds, it was a growth year where we delivered around 4%, 3.8% growth to cross the 250 billion mark and become a 253.9 billion industry. Export revenue grew slowly as was expected. It was a 3.3% growth, but the surprise here was that while exports slowed down a bit, we definitely saw a significant increase in domestic market, including the business for tech services. So domestic market grew. I think this was the fastest growth we have seen in domestic market ever. It grew at nearly 6%. Next slide. Some of the key tailwinds that stood out last year. One was, of course, the GCC story. India continues to be the preferred hub for GCCs, and this is getting even stronger as we see companies, as we see the GCC scope of work moving from just back-end work to more of R&D and more of innovation. And this is where the India attraction goes up significantly, because primarily driven by talent, stability, political stability, and ease of doing business. I mean, these are three factors that every single GCC today is talking about. ER&D was a very, I won't say surprise. I think it's always been a strong sector and we did expect it to do well, but I think it did better than expectation. The ER&D sector overall has been a tremendously positive sector for India. And I think going forward, this is going to be one sector that we should watch out for. And it consists not just of the global ER&D companies or global GCCs doing ER&D work in India, but we are seeing a tremendous growth in Indian ER&D companies who are doing some fantastic work like KPIT, etc. Domestic revenues, I talked about domestic market. It grew 1.8x faster than exports. And I think this was a very big surprise. And I hope that this will continue to sustain. This was primarily driven by government and enterprise spending. The deal pipeline, while there was a marginal growth, and what you see here is not the absolute deal pipeline. This is an index number and it's illustrative. But overall, while the deal pipeline did grow, it was marginal. But the big change was in the size of the deals. Nearly 70% were more large deals. So this is, again, good news for us. And lastly, there has been a lot of narratives being built around, whether this industry is laying off people, whether we are losing jobs to AI, and we'll address all of that. But net, this industry grew in terms of net employment. We hired around 60,000 people in addition to over and above last year. What we are seeing, definitely there is a correction because there was a lot of overhiring done during the COVID year. So we are seeing some level of correction happening, which is expected and needed for the industry. And also we are seeing the hiring moving towards jobs in AI, data, cloud, cybersecurity. So the frontier technologies is where we are seeing the demand growing, right? And the industry is putting a lot of effort to ensure that we continue to upskill existing workforce. So I think we have committed nearly 60 to 100 hours per year per employee on upskilling, which is frankly a very significant number. Since everyone's talking AI, let's also talk a little bit about AI and what's happening in this space. We did a pretty good survey, I would say, of the industry to figure out how are things moving on AI. And what, at the high level, what we'll say is the AI related activities, whether it is forming for partnerships, collaborations, whether it is launching new products or services, or people coming out with new strategies, etc., etc. There was nearly a 3x growth, around a 2.7x growth in AI related services this last year in CY 2023 over 2022, and a 9x increase in Gen AI related activities, which was, of course, expected. What is interesting is that nearly 650K employees have been trained on Gen AI skills, and this, I think, is a conservative number based on what we have got from the companies. But I think if we some of the large companies, but it's a global number, so we don't know how many of those employees are India only. But if you look at the large companies, they are training in millions in terms of getting the whole workforce ready to work with these productivity tools. This is a very interesting survey that we have done. We will be releasing it soon, but I am giving you sort of a sneak peek into what we have done. But there's been again a lot of debate about readiness of Indian companies when it comes to AI. And what we have done is we have studied more than around 60 of the larger companies across 6 different parameters, dimensions, to understand what kind of progress is being made and how ready are they. Now, of course, when we release the report, we will release all the data and you will get to see it. But a few key highlights I want to call out. For example, what we are seeing is most of the large companies have evolved today to offer services like data engineering, AI and LLM model fine tuning, as well as demonstrated capabilities to put these models into production and at scale deployment. So most of our companies have been working in the background to be ready to offer these services. There is a lot of focus on building a strong vision for their AI roadmap, and simultaneously in parallel, there's also a lot of focus on building on strong governance internally. And most of these companies, again, have like a center of excellence with specialist leader, AI leader in place, along with clearly defined success metrics to measure progress on AI initiatives internally. So yes, they are taking it very seriously. They're putting the resources in place. They're putting the metrics in place, and I think that's what matters, because if you can measure it, it's real. So it is definitely becoming real. We have seen a lot of investment going in on both upskilling existing talent on AI, as well as accelerating hiring for new AI-linked roles like AI engineers, consultants, etc. Also seeing a huge shift towards more partnerships when it comes to business model reinventions for AI, developing their operational models for AI. And it's not just partnerships with the large CSPs, which is expected, but we are also seeing partnerships with model providers. We are seeing partnerships with startups, which have differentiated capabilities and models. And many of these companies are investing today in what we call a unified Gen AI platform to accelerate POCs for clients. So net, I would say that we are definitely seeing the right steps being taken. The company is moving in the right direction to build their AI readiness. I think, at least based on the survey, and only time will tell how this plays out, but based on the survey, what we are seeing is there's a pattern emerging. I don't think there is, frankly, a need for the services companies to go out and build a lot of LLMs. But what they will need to do is fine-tune the LLMs to build out vertical solutions to solve for specific client problems. And that is definitely taking shape, and many of them today are ready to offer these solutions. Next slide. I'm going to request Sangeeta Gupta to come in here. This is a CEO sentiment survey that we do. So Sangeeta, if you can take it over and share the highlights of the survey.
Thank you so much, Devjani. And this is what we do every year. We talk to the industry leaders to get their perspectives and their sentiments on what are they seeing from their client perspective, whether it's related to tech spend, overall growth, as well as what does it mean for their own for their own businesses. So I think the good news is that while the global macroeconomic headwinds will continue, I think we've all heard that the new normal is the no normal. So that is the state that we live in, and we have to learn to rewire growth or thrive in this environment. So while global growth is somewhat stagnant, there's not going to be much difference. I think India will also continue to grow 2x faster. So the interest on India continues to be equally high, if not higher, than what we've seen in the past year. Enterprise tech budgets, most of our member companies expect it to increase in 2024 over 2023. It's not going to be a hockey stick shift that we saw, but there is expectation of an improvement, especially in some of the sectors that did not perform as well in 2023, like high-tech TMT, BFSI, and given the fact that with all the shifts that are taking place from the technology environment, the investments that they have made during the COVID period, as well as the AI transformation, you will see growth in both some amount of discretionary spending as well as cost efficiency spending. I think the importance of the skills shortage, and India is the place where you can get access to talent at scale, will continue to drive more investment into India. We've also heard that digital tech spending is going to increase in 2024. So you will not just do digital transformation for the sake of digital transformation, but efficiency-linked digital transformation is going to be a highlight for companies as they spend on technology this year. Also, the role of technology itself is changing. It's no more just about a cost and efficiency lever. So when you're spending on discretionary spending, enterprises are looking to service providers and saying, what more can the technology do for me to either find new demand sources? What can I do to better engage my customers so that my attrition of my customers decrease? What can I do to get faster access to newer markets? So clearly the role of technology at an enterprise level is shifting, and hence the conversations the industry is having with its customers is changing from what it used to be in the past. We can move to the next slide. And this is really where we see, the sentiment uptick for the industry. Most of our members expect, almost 79% are saying they expect better revenue growth in FY 2025. Hiring outlook is also likely to be better than what we saw across both fresher and lateral hiring. And of course, as AI moves from POC to production, discretionary spend will see an increase. We've also had a strong year, like Devjani talked about, of building a deal pipeline. As these will get into implementation, that will drive revenue for the industry. GCCs will continue to grow. I think the interest from the GCC ecosystem, new GCCs coming to India, I think even in just the first 2 months of the year, we've seen a lot of continued interest. And even the survey that we ran with startup founders, they're saying it should be a better year for funding and growth. Now, how better is better, that is out there depending on the macroeconomic and overall tech spending environment. So Devjani, I'll hand this back to you for the last slide.
Thanks. As we look at this year and maybe the next few years, I think there are 4 key imperatives for success in front of us. The first, we have to accelerate our AI capabilities. That's a given. I think it's not a matter of how much, but it's a matter of how fast, and whoever does it faster than competition wins. So this one is going to definitely be a race. Reskilling is going to become tremendously important because a lot of the newer jobs, newer priorities will require the kind of skills that we may not have. And I think this is going to be a huge focus for the industry. I think the fact that this is a new normal, things are going to change, is a given. That's the only thing you can predict in today's world, that what you have today will not remain so tomorrow. And I think our industry has come to terms with it. And I think this is something we just have to build into our thinking, build into our DNA, that we have to operate in a new normal world, which will continue to change. And last but not the least, and we are seeing this, we are seeing a lot of focus on this, we are seeing a lot of discussions on this. We have to increase our focus on R&D and IP creation. I think this is going to be extremely important for overall leadership and India leadership in the AI era. So with this, I will hand it back to Kavita for questions.
Recording stopped.
Yeah. Can I please request all of you to raise hands digitally so that we can take questions in that order? There are any questions?
I think we were brilliant in our explanation.
Yeah.
We have a question from Jas, though.
Raise. I can't raise hands, I guess. I think Mint, yeah, Jess has a question.
Go ahead, Jas. Are they muted or they can speak, right?
Yeah, they can speak.
Go ahead, Jas. You can unmute and speak.
Unmuted, but he's not speaking, so let's see.
Okay, is there anyone else? Sai?
Yes. Thank you for the presentation. I just wanted to know, compared to last year, around 8% growth has fallen to 3.8% this year. So can you tell us like what had contributed to this? Are we seeing a demand correction, and will that happen in the FY24? Are we seeing, short-term continuation of the same demand impact? Thank you.
Sangeeta, you want to take this?
Yeah. No, I think Sai 2023 was a year that had a lot of uncertainties, right? The global macroeconomic environment was very slow. Decision making. So it's not that tech projects did not exist, but there was a lot of deal signing that took place, but there was a lot of delay in decision making that was happening. So hence a project that would have started in a quarter got pushed out by 6 months, and hence you're seeing the impact on revenue growth. So clearly, I think and the third important factor was, I think, a correction of COVID acceleration, because you saw a lot of investment happening during the 2 COVID years. And in 2023, more and more companies were focused on saying, let me get return on investment on what I have already invested rather than spending new projects. So clearly, I think all of this has led to a slowdown in growth. But I think what we are very delighted about is that it was a year of growth still, while it's a low number, but we still grew. I think as we look at 2024, some of these factors are correcting themselves, as you're hearing the commentary from many of the listed companies, global companies, as you're talking about. But the environment is still very, very uncertain. So we are not making any predictions of what the outlook will be in the year. But as we are entering the year, we are entering on a much positive sentiment than we started into 2023. So I don't know if Rajesh, Sindhu, you want to comment on that?
No, I think you covered it all, Sangeeta. I just want to tell Sai, if you look at the numbers, even though, as Sangeeta was saying, that even though the growth was probably relatively less, you look at some some green shoots like ER&D space, for example, GCC space, for example, our BPM space. They've grown significantly better, in fact. Also, as Debjani mentioned in her initial remarks, we also find that the domestic market has picked up momentum significantly. In fact, the domestic growth rate is almost 2%, 1.8%, grew higher than the export, which also means that there's enough happening within India. So I'm very, very optimistic about how this is going to be turning out. So yes, there is, if you look at the absolute numbers, they're actually less, but there's a lot of, momentum we see underneath the numbers.
See, 2023 was, how did we start 2023? We started 2023 expecting to get into recession. And let's not forget that the largest market for our industry is still US. And the biggest fear in the beginning of 2023 was that US is going to get into recession. And then, of course, the Ukraine-Russia war continued, and that just added to the uncertainties. So what this act resulted in, net, what this resulted in was While tech spending people did not cut spending, they did prioritize it on the key projects, artificial intelligence, but decision making stretched much longer than the usual decision making period, especially for large deals. And this had an impact. So you saw a lot of deals actually moving into next year. So I think 2023, I mean, you can't predict, you never know what will happen in 2024. But as we stand now, I think 2023 was a very, very uncertain year where people were not ready to make big decisions or take big decisions quickly. I think what we are seeing in 2024 is a bit of a reversal where people are going back to urgency. But again, this is one space you have to watch, especially in the kind of geopolitical tensions that we continue to see.